Welcome to TradeTheMBI.com. This is John. This report is for the 25th of June. I think we had some pretty clear parameters that I've been talking about. We have the ABM yellow at 27.7150. You're below that price. You can start to look to the other ones, but being short below that price is reasonable within the sell signal that we've been looking at. We've had declining shakeout. It's back over here. I think for as much as like the middle of June, pretty much right after the wave of buying from the funds came through, sort of paused. It didn't create too many problems. We had this nice move that dipped below the 76, but it kept being bought back up and we kept fighting little pops above the 71. I think yesterday, which was Friday, pretty much ended that. We didn't get to the 71.50, which was kind of a good sign. To me, it was sort of a exciting, kind of boring day. So I know that's sort of a oxymoron in the very sense of it. But we ended up pretty much soft going across, and a little bit of weakness, and then a little bit more weakness, and then finally at the end of the day, a lot more weakness. And that seems to be progressing even into today. Now the NQ, likewise, also below, but had been doing better prior to. It closed above. Currently in the pre-market, it's slightly below. So this has been the outperformer, and we would expect at some point to see this suffer more than the S&P on a significant downturn. The euro continues to do, they're calling massive rally, that decline. It's always funny when they talk about it, but we've been looking at it building from a solid base. It has to get past this 23% again. That's going to be the big problematic move. You're going to get these buy signals, but if they don't penetrate the key levels, then they just continue to recycle. We've noticed this in the DOC, the steel, maintaining its ride above the green of the red all the way through. That pretty much dictates a continuation of a broader trend, which we can see began right here, which you might call the bullish cross of the steel. The problem is with any sell signal, and that orange cut in between is just continuation, and that's pretty much what we see as continuation, with most of the orange staying in between cyan, green, and red. In this particular case, we get a little bit of drop down, and that's where you get the little bounce. Little variations that cause those little moments. That's going to lead to a flight of quality. We're reaching that point, though, where interest rates, because of the continual rise, are really reaching a parity with what you can earn from the market, and that really makes it much more attractive because you have zero principal at risk. And we had seen this slight little build-up by signal back over here from oil. Took quite a dramatic jump. Yes, positive extreme, so that will get retraced. The question is, though, will this continue for a while before it does that? This would put also additional inflationary pressures. It's interesting when we just had OPEC recognize a output increase. It suggests that maybe demand side is improving even more than expected, which would mean growth, and more growth, which should cause this to bounce as well. But gold's just been in this huge doldrum. Just lots of selling that's just kept it within a continuation decline zone. Kind of the antithesis of what you would expect. All right, so let's take a look at what Friday produced. I'm just going to slide this over, and we can enlarge it just a little bit because there's quite a lot of lines in there. But I wanted to point out what the key ones that I was looking for. Once we got the gold here above 50%, we started producing these positive extremes. And what I start doing is I start marking where they are, and they become target ranges. So first positive extreme happens right about here, the 54 range. Then you get a secondary one, which I usually think is pretty high caliber, retrace level at 56. Well, that's okay. You're not in a sell signal at this particular point, but as price starts to rise, we get additional values. Now, these are going to be the ones that usually are hit first and will happen on subtle retraces, and it usually happens as we cap out. We still had strong movement here. Wasn't until we ended up with the DOC spread that really began with the opening here of cyan, green below, red falling, and of course the orange plus 13.50 is really what always helps. And you can look at that from a broader, what we would call snake move, where you have the tongue of the cyan and the expansion. Those become pretty decent. It happened back here as well, where the orange gets above 13.5, and so even if you were looking at these shorting up at the 64 3/4 range, I really don't have an issue with that, because I don't want to be shorting at the close on the low side, but particularly when I have cyan below red. But certainly every time I reach the highs, now you can look at this and say, oh yeah, but look at you took some heat. Sure did. And actually averaged in a couple more spots here on the new highs that took place right along this point. But I had a pretty significant retrace level here at the 56s and 54 range. So it's just a matter of, okay, risk to reward. I can go ahead and risk with an average that's somewhere in the 66 plus range, right around this ABM, with a stop at the 75, expecting over 10 points on the return. And that was pretty much the expectation. We ended up with a nice move that started filling all of them, ended up at the 50%, just above. Took a little bit there simply because it couldn't break below the 50% every time it touched it. So it was an opportunity that I would have then to add in a little bit later on. And we started working across, and we ended up with several key points here where the cyan was always staying above red, and it was just a matter of looking for spike moves of the orange that generated a little bit more movement. It got kind of frustrating as we were going across. At the end of the day, it didn't seem like it was ever going to break down or whatever. And then we ended up with this. And in fact, I have to scroll back because it shrinks the chart too much because of the decline. So I'll go right back over to here as we end up with the move towards the end of the day, which was right over here. And sure enough, it produced significant decline. We started getting this erratic shakeout, started breaking down, we started getting pops back and forth. But what was starting to become consistent was the cyan above zero and the breakdown of red below 7.5 really became encouraging. And then we ended up with this very swift end of day and took out all the targets, filled them all. And that's the whole power of those positive extremes, to know the potential for those. Cleared that up, but then we ended up with this huge pop, and I normally wouldn't do it, but when I ended up with a white candle going into the close, I went ahead and shorted that move. It was just too irresistible with that setup. In fact, let me see what exact level I got was. I only got a partial fill on a 61, so right at it. And the close was exactly the 61 there. And then we ended up trailing off with blue, and then we've created some more white candle reset points. So we'll be able to take this one that's up here and reset it to this lower one, and it starts to give us a clear range. Quite a few of them going through right here as we get gold. So every pop to the 23 is another opportunity to add to it, which I'll probably have to start doing here. It was just wee hours in the morning that this took place, and very clear on how that functions, and also an indication that you may think the market isn't going in your direction and that it gets close to a spot, fights it. Sometimes you have to be patient with it and wait for it to take place. And as long as you have a relatively consistent stop set up with a profit target, it's just a matter of waiting for one or the other to be hit. And sometimes you get these muck conditions with both like the shakeout and or even DOC, where it was just a mess. There wasn't a whole lot of clarity, but we did know that we were below that 7150 on the ABM daily, and that meant the bias was generally short. And so taking advantage of that bias can be profitable. So that's just a much broader play within the short-term chart that I pointed out. As always, though, trade well, and I'll put charts up as they're warranted.